Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, June the 23rd. The year's 2022. Let's talk trading. You're trading and you with Walmal. These videos are for educational purposes only. Your results may differ from mine. Walmal and I were talking before we started this video, and I was asking him about how many pips he made in a trade, and he says, "Well, I don't have that on my screen anymore." You want to tell the boys and girls and non-binary traders about that, Walmal?
Sure. I like to keep things simple. I probably said that on 100 videos at this point in time, or at least it seems that way. And that's how I try to run everything in my life. I don't, I try to always decomplicate things, or as the psychologists like to say, I try to go and deconstruct things in my life and look at things in terms of little things and just little bit-sized things. So, yeah, let's face it, a pip is small and a point is even smaller. So I could do that. And for some traders, that may make sense. But for me, it doesn't. Because what's important for me is I have a goal that I want to meet every day in terms of a dollar amount. Okay. Let's say my goal was $100. So what I do is I look at it that at the end of the day, I want to have $100 more in my pocket today than I had yesterday. And so when I look at the charts, I say I'm typically going to trade for 3 to 4 hours. Okay, that probably means that I'm going to want to get into at least 3 or 4 trades, minimum 3 or 4 trades. So if I take that little division and I say I want to make $100, I'll take the $100 and divide it by 4. Okay, and that tells me that I want to go and make $25 on a trade. And so what I do is I just look at the dollar amount and say, I only want to make about $25 on a trade. And at the same time, I have to go and take care of the risk side. So, but on the profit side, I'm just looking to go and make that $25. It's easier for me to do that. I never change my lot size. Everything stays the same. So every day, everything stays the same. Now that works for me because I've grown my account size to where I want my account size to stay. And then anything that goes above the account size, I pull that off. It just, it no longer goes to grow my account. I've grown my account to where I need it to be at this point. And so because of that, it makes things easy for me. I know that I'm always going to trade, a certain amount of lots. I'm always looking to go and get a certain number of dollars. And it just, for me, becomes very, very simple. And that's the whole key for me. And at the same time, I alluded to it already. I'm willing to go and lose a certain number of dollars, for a particular trade, and I'm willing to go and lose a certain number of dollars for the day. And I know that by looking at it, if I know that, for instance, I'm willing to, let's say, I'm looking to make $100 a day, that means in a week, I'm looking to get maybe $500. Well, at the same time, I know that it's very, very likely I'll have one day that's a bad day. And so, let's say what am I willing to lose? What am I willing to go and make at the end of the week? Well, if I'm willing to go and make, $400 for the week, that means the most I can lose for a day is $100, and that's my cutoff point from a risk point from the other side. So when I get into a trade, that means that if I'm up or whether I'm down, am I going to violate that rule of losing more than $100 for the day? If so, get out, and just end it. And again, just keeping it very, very simple.
Right, but you know how a lot of those what do we want to call them, trading gurus say don't focus on the money.
Right. And here's my problem with not focusing on the money. Okay, you go look at timeshares. Okay, how do they go? And you go pay all this money at the beginning. You pay some type of down payment to get into the timeshares, some type of mortgage or whatever, and then you pay a monthly dues. To go maintain things, and that's all done in dollars, amazingly so. But when you go to rent the place, you don't rent it in terms of dollars, you rent it in terms of points. And why do they do that? They do that to take your eye off the ball because they know that that's what they're going to do. At one point in time in my career, I don't know if I even told you this, but when I was in college, I worked for Club Med, okay? And the way it worked then, this is back in the early 80s, and showing how old I am, but back in the early 80s, the way it worked was you paid a certain number of dollars to go to a particular resort. And then when you got there, what they did is they gave you a little card, and on that card was your allotment of how many points that you were allowed to go and spend per day on drinks, whether it be a Coke or something, what we'd like to call an adult beverage. And they would just take that little card, and every time you bought one of your drinks, they just subtract it. Why did they do that? They did that because they didn't want you to be thinking about dollars when you're on vacation, and what it does is it, again, takes your eye off the ball. And what would happen is at the end of your stay, more times than not, most people, they would, let's say they were given 1,000 points to spend on drinks. Well, guess what? They spent 2,000, and they got to write a check at the end of their vacation. Again, because they're there to make money. Well, I think to a certain extent, the problem with playing with pips is it goes and separates you from the money. And some people, that may be a good thing. But for me, that's not a good thing. What's most important to me is the dollars, because at the end of the day, that's what I'm putting in the bank. I'm not putting pips in the bank. I'm putting dollars in the bank. So I have to play very, very close to the vest because of that. Now, those gurus who say that, just look at the pips, look at the points, don't look at the dollars. Okay, I can understand where they're coming from, because if you get focused in on dollars too closely, what that can do is that can put you to an emotional place, because it's like you sit there and you take a trade and you lose, and you can go and say, oh shoot, I just lost $1,000 at the end of this, and it can really wreck you, not just for that day, but for the week or for the month, because you just think about how many dollars you went and lost. Okay, controversially, you could go the other way too. You go and take a trade, and you make $1,000 on. Look how good I am! I made $1,000. You get so hyped up on it, and next thing you know, you're taking trades that a little bit more risky than you should. So I can understand where they're coming from.
Yeah, but the thing is, though, it's you're talking from a forex point of view, but I'm talking from a trading point of view. I mean, if you're trading stocks, you're trading in dollars and pennies. But
Oh, absolutely.
that's where when I first started trading, I started trading stocks, and that's when they told you don't focus on the money. So
Yeah, and the thing is, as you know, Hero, my biggest teacher was my father. My second biggest teacher was you, but my father traded nothing but stocks, and so I always think, and maybe that's part of the reason why I think in dollars, because you go and look at the U.S. stock market, every point is a dollar. So it's maybe I just got into the habit because of that. I don't know, but to me it just makes more sense.
no pun intended.
Exactly. I didn't realize you said it. Thank you.
Well,
But
the thing is,
hey,
what I titled this was "You're Trading in You," and you were saying that you just really have to know yourself, and that if you're focused on pips, it doesn't work for you.
yeah, it doesn't. In fact, I took one of the indicators, the trade report indicator, and I went into code, and I actually, to me, it's so important to get the pips off the screen. I went into the code and actually pulled it out of it and just left the dollars in there, because the most important things that are on there is my net profit loss, okay, and how much I actually would have made, okay, in terms of dollars, and what my commission is, what I paid the commission. Those are the numbers that matter to me, and and obviously the other things that are there, like the number of trades, how many buy trades, how many sell trades. Those are all great things to have there, because if I look at, like, right now, I've had a lot of trades today. I've had a total of 28 trades today, but 9 of them are buy trades and 19 of them are sell trades. So obviously my bias was to go short, even though the market's been going up since the entire time that I've been trading. Well, why has my bias been short? Well, my bias has been short because what I've been doing is I've been going and playing the retracements off of those. When it would run up, I go and take the sells on the retracements. You know, that's just the game I've been playing today, and it's worked out well for me. But that gives me a really clear indication of what's going on.
I'm looking at the market here, this particular hour, how it broke out of the previous hours, broke above the previous hour's high, 17 pips above it right now. And when we were on the phone before we were on the video, I said, hey, the price wants to hit the launch pad, and if it does, it wants to go to 60. Well, it stopped right around 58, but that was because today's open is at 58.9. So
Right. It
it's
hit the open and bounced off of it.
well, I guess it depends on the broker, but yeah, it pretty
Right.
much stopped right around that daily open.
Yeah. And we've been talking the last couple of days. We've been talking about ranges. And that's a perfect example of we were talking specifically, I think, about hourly ranges and short-term ranges and so on and so forth. But if you think about it, that's also a type of range trade as well. It went up there to the top of where it's been before, and it bounced right off of it, and that's a really good range trade because if you look at it right now, we've got about 96 pips for the day as a range. That's a pretty good day. So you get into that area, that's maybe a good place to go short. And that gets into the entire idea of your rat trade. The whole idea of okay, we're within that area where it's a good chance it's going to go and turn around. Because if you really think about your rat trade, what it really is a range trade, and you're just looking for it to go and come back the other direction.
Well, yeah, plus with it being right around the daily open, you've got that open minus the low factor where, and you've got the buy zone and the rat trade. So you've got a lot of different things going on at the same time.
Right. So it was and so some people would go and say to me, why would you be looking for shorts? That bringing this full circle back. The reason why is because it's going to run up, but eventually it wants to come back in and find a settling point. That's just what the market does. Run up. It came through that 40. It made a run at that 60. Okay, and went up there, and then it turned around, and then you can take those trades off of that top area and just take off 2, 3, 4 pips. I'm talking pips right now. Because I think that's how most traders think about it. I would think about it in terms of dollars. I'd be looking at it saying, I want to go and make $25. Give me 25, give me 25, give me 25, and just keep on, hitting it like a little slot machine. And eventually you lose because then it breaks that 60 area, and you say, okay, well that's good because I made all this money here, and that more than outweighs the one loss that I take. And if I'm really good about it, it's like, yeah, it broke it. Okay, I can get in on this, and I can go and take a trade in the other direction and take the run in the other way.
Right.
One of the things we talked about, with ranges, just cleaning up some of the stuff we talked about the last day or two on the videos, is that one of the things about ranges is that it's never clean. Okay, and what I mean by that is if your range is like, let's say it's 25 or 30 pips. Okay, when it gets to that edge, it almost never goes and breaks it cleanly. It always goes back. I know you like to call it going back to the well because you get additional entries and just additional chances. And that's the thing where you can go pick up, with my type of trading anyway, you can pick up a lot of pips because it's the type of thing where it goes down to the 40. Go in, take the long, get 2 or 3 pips. Comes back down to the 40. Go in, take the long, get 2 or 3 pips over and over and over again.
Yeah, and you know what? The fastest 15 minutes in trading is up, fellow traders. So, if there's something on your screen that's not working for you, just get rid of it because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.